Good evening, ladies and gentlemen. This is Clueless 8. This is the end of the day report for Tuesday, May 20th, 2014. Let me cover a couple of important points regarding my premium service and some of the things that I cover in detail. Couple of very important reminders. Number one, the speed of my trades cannot be matched by the speed of my posts. So in other words, even though I'm putting in real-time posts as humanly possible, they are not going to be, within a 5 to 10 second period. I try to do it within the first 30 seconds or after my trade is done, or I'm about to embark on that trade. So do keep that in mind. Number two, the market's a volatile beast, and this is a very, very aggressive, volatile trading market. It is in as I've posted a few times, in nanoseconds the directional bias of the market alters itself. It changes from looking on, let's say, on a 15-minute or a 30-minute chart bullish and constructive to turning into an ugly mess on the downside. Case in point, today, this afternoon. So me switching directions and going in and hedging hard by buying my usual stuff, my IWM or Russell puts, or shorting shorting an individual stock via by puts, is going to be quite common going forward. Has been before, but now that you guys are part of this fold, and I'm kind of sharing a bunch of my trades and stuff with everyone, with my members and subscribers, you'll see that there is no rule, there is no specific rule to the game. One just has to be flexible, fast, make decisions on the spot, on the fly, try to be disciplined, but at the same time not be moronic or try to be hero in the face of a large buy or sell program that's hitting the market. So just beware of those type of things in this ever-changing landscape that we trade in, and I will do my best to benefit my members and subscribers. And so far, I think I've done a pretty damn good job of showing things which have made people who have participated a decent sum of money. So saying all that, we're going to cover the same format and sequence of charts that we did over the weekend. So one can basically put one on one aside and compare what happened and what since the weekend. Okay, so saying all that, let's look at the Dow Jones Industrial Average here. Dow Jones Industrial Average, you've seen this before. Here is the uptrend line from November of 2012, and here we are. So if you see it very clearly, we bounced off exactly off this accelerated uptrend line that I had drawn previously. So this is somewhat of an ascending triangle, if you want to look at it, and it looked like we found support right here at the lower Bollinger. Just follow the arrows and the cursor right here on this blue line, and then we stopped. So we didn't crash through here and come down and visit 16,000 in one go, even though the sell programs were pretty heavy. And we're going to see the same type of pattern in the other indices when we go through it. So here we are. This is definitely not a constructive pattern. So things changed. We were here on Tuesday, the 13th. We were here on Monday, the 19th, at 16,530, and then of course today being the 20th, this is where we are. Okay, pretty large red candle here. So what I'm starting to see here is that it looks likely that once the seasonality of this particular weekend is over, this week, this being Memorial Day week, what I've seen over the past couple of years, that Memorial Day week generally has a positive bias due to different factors. We also had POMO today, and that injected, and I think I put it up there for everyone on the report. Let me grab my thing here. Today was May 20th. Today we had a 2.75 billion POMO, and we have none till next Tuesday, which is May 27th, and then we have a big one, 3.25 billion on Thursday, May 29th. Not a coincidence, given that that's pretty much the end of the month, and the portfolio window dressing comes in pretty hard at that time of the month, generally speaking. Okay, so we have so the seasonality we have here is that there's a couple of factors. We have Janet Yellen speaking tomorrow at 11:30. She generally has a positive effect on the markets. Again, there are no rules, just passing on what we see and what you all see. We also have Memorial Day weekend kicking off. The powers that be like to keep the markets in healthy shape and not some massive crash type of pullback on these type of weekends. Large shopping weekend has a direct multiplier effect on the U.S. economy. As people spend money over a long weekend, such as Memorial Day weekend, lots of sales and things like that. Retail is extremely important, as you know. We had disappointing numbers today, and the powers that be want to make sure that we don't have we Americans actually spend money and feel good over a big shopping weekend like the one coming up. So, saying all that, let's see how this chart-wise how this pattern can resolve itself. If it held here, the bullish scenario is that we bounce off this line or even come down here, which is the lower acceleration band at 16,220, and then we have a heavy bounce, which brings us up and clears this confluence of these moving averages here, and then we hit a new high at 16,757. That's the sort of the power bullish scenario. Or we hold here and we basically bounce off here hard. We have this bearish engulfing bar has eclipsed the 34 and the 50-day moving average. Now keep in mind this is the daily chart, so that's a negative. But again, we could find support here. The bear scenario, not a bear scenario, but a pullback scenario, which I think could very well happen. Could happen this week, could happen next week, could happen within a couple of hours, or could happen in June. I don't know. Can't really tell you that. Is that we break through the Bollinger, the acceleration band, and we come down and test 16,015, and we come down and go below the 200-day, the black line, like we did here back in February, and then we basically attempt a valiant recovery from this level. So that's the pullback scenario, that we pull back down here, test this uptrend line at like we did here on February 5th, and I think this is a very likely scenario. We come down to 16,000 and we basically bounce from here, one day at a time. Looking at the internals, there's a negative divergence in play. On Saturday when I covered this, we were pretty much here. And let me see here, Friday we were here, we have crossed over, nothing major yet. These histograms are going into the red, and they normally do get pretty oversold if you look at it at around these levels here. This is very oversold here, and there we are. So that's the Dow Jones for you. So overall, this is a bearish pattern. You can consider this to be a head, left shoulder. Let me make it bigger. Head, left shoulder, right shoulder, breaking down, bounced off exactly off this accelerated uptrend line, and I've covered the rest. Let's move on to the Nasdaq Composite now. Let's put on the daily. So let's see what's happening in the Nasdaq Composite. Overall, the Nasdaq Composite, believe it or not, is a lot more constructive. If you look down here, and I've pointed this out a bunch of times, we are seeing a positive divergence. This is a very large positive divergence, okay? And thanks to the movements in Apple, in Netflix, in Amazon today, other days Priceline and Google, the big behemoths in the Nasdaq 100. We are seeing a rather a dramatic improvement in the Nasdaq. I still believe that unless we fail below, and this is by the way an inside day. If you notice this large green candle, this one inside day, I'm not the greatest technician in the world, but I'm just sort of seeing the simple things. We looks like it wants to at least go and test the 50-day at 41.73, and I've covered all this very extensively on the weekend charts. And if we do cross over this 34 line, which by the way, if it keeps on continuing staying below this, is eventually going to turn around, in which case it'll be a nicely bearish scenario and we're going to be looking at much lower prices. But if it does that, and if it comes up here and breaks up from here, then we're talking about a pretty sharp move up. Downside is that we come back and test the 200-day at 4,000, and below that, I've covered that in the previous things. We're going to go to 39.43, and we have some room to fall. So internals, however, as I explained to you and I repeat again, are showing a positive divergence. So that's the Nasdaq for you, and let's be very careful in what we trade and how we handle our profits. There, I just drew this. So that's the other thing. If we hold the 200-day, we're good. If we're not, we're in deep trouble. Okay, that's it for these two charts. I'm going to move on to the other ones in the next frame.